In this week's episode of the Stockscores Market Minutes, I'm going to show you how to take advantage of the crazy market volatility with some ideas on how to day trade the stock market crash. I'll then do my regular weekly market analysis and we will run a market scan in search of opportunity before the day trade of the week on RNG. So obviously with all of the volatility in stock prices, there is an opportunity for the short-term trader that knows how to take advantage of it. Day trading right now is extremely lucrative because of the volatility. However, it is also more challenging because of the volatility. You see, what happens is we are getting intraday trend reversals on some days, and that is causing day trades which are profitable to turn unprofitable very quickly. And so you need to be very nimble when day trading the market right now. Really focus on the trend of the overall market. Stocks are trading with this extreme price volatility because there's a lot of uncertainty. And as I said, that makes day trading very lucrative. What you want to do is focus on the intraday trend of the overall market. So I like to watch the S&P 500 index, and I use the ETF, which is symbol SPY. I watch that on a 2-minute chart and pay very close attention to what the trend is over the previous couple of hours and whether there is a important trend break. Now, when the trend is up, I want to be a buyer of stocks as long as they are breaking from predictive patterns with abnormal price and volume. And now, if you've been in my videos before, you'll know that I have an indicator called an action candle. And action candles look for stocks that are trading with abnormal price and volume. We can use those for short selling as well, but again, we only want to do that when the market is trending lower or when it's very overbought and likely to trend lower. And so in that instance, I look for short sell opportunities, but again, with these action candles that are breaking down from predictive chart patterns. Now, I've got some examples to show you in just a moment, but one thing that really has to be emphasized is that risk management is essential. If you are wrong, you need to take the loss because the market can move so quickly against you that small losses can grow into big losses very quickly. All right, let's take a look at some examples, starting off with the S&P 500 chart from Friday, just to show you how this works and how I think about it. Now, this is a 2-minute chart, so what you're seeing here is just the trading activity for the end of the day on Thursday and then the activity through the day on Friday. Each one of those price bars there, which we call a candle, represents 2 minutes of trading. And what you should notice is that the market closed Thursday up here and opened Friday way down there. So it made a pretty substantial gap to the downside. So that caused me to actually want to be looking for buy opportunities on the open. And the reason is that if the market gaps down and is weak, you're going to get lots of stocks that are weak. However, if you get a stock that is showing strength when the overall market is weak, it's probably because that company has something very good happening. Now, there weren't very many buying opportunities at the open. I will show you one in a moment that did very well. But the idea there is I want to actually be a little bit of a contrarian at the open because the market opened with weakness and it had been trending higher for the previous few days. I really just wanted to focus on buy opportunities. Now, that was just for the open. Once the opening half an hour had passed, then it becomes a question of what is the trend. And what I look for is whether there are rising bottoms on the chart or falling tops. And you can see that on Friday, we generally had rising bottoms through most of the day. And that is why I was focused primarily on buying stocks for most of the day. However, at the end of the day, we had this rally right here, which really took prices parabolically to the upside. And that is a situation where now I'm actually interested in looking for short selling opportunities. Why? Because we were showing some extreme strength late in the day, which meant that any stock that was showing weakness when the overall market was able to move up like that probably had something wrong with it, and therefore they had a better potential to go lower, especially if the market showed weakness. And look what happened into the close. we had a pretty sharp sell-off. Why? Because the market ran away from its trend line. It was way above its trend line, and that is a setup for a pullback. All right, so with those things in mind, now let's look at a couple of individual stocks. So I have a service where I provide my trade signals. It's all algorithmic. Basically, a computer is running math on every single stock that trades in the US, looking for action candles. Action candles are these little pink dots that you see on the screen. And when I see an action candle, I want to inspect that chart to see if it has a predictive chart pattern. So in this case, INO closed above Thursday's high on this candle right here. It made an action candle, and it was breaking a downward trend line on the 2-minute chart. So that's a pretty good chart pattern setup. It's not my favorite. I would rather it build something like an ascending triangle, which is another pattern. There's actually a little ascending triangle over here. That's what that looks like. But it was good enough. And so that was one of the stocks that I highlighted in my active live service. You can go to the Stockscores website, look around on there, and subscribe to it if you like. And the stock moved up very quickly. Now, these lines on the screen represent reward for risk. So for every $100 of risk, which was the risk on this trade, it closed the day way up here, which was just under 7 times risk. You can see that 7 number. So let's call it 6.5. That meant that this trade made 6.5 times its risk, or $650 for every $100 of risk. Now let's look at a short sell opportunity. Remember, I said that at the end of the day, I was more interested in looking for shorts because the market was overbought on that 2-minute time frame and likely to move lower. So ADSK triggered a bearish action candle right there. This from a very predictive chart pattern called a descending triangle. I can draw it out there in blue. It broke down and the stock plummeted into the close, helped by the fact that the overall market also sold off into the close. Now this stock ended the day at about 10 times risk, which meant for every $100 of risk, it made about $1,000 of profit. Now I want to be clear, when I say $100 of risk, that's not the amount that you would put into the stock, that's the amount of risk, which is the difference between the entry and the high of that candle, which we use as our risk element. All right, moving along. This is how the active live screen looks, and we have opened this up for the month of April. Normally you have to be an active trader member of Stockscores, but for the month of April, I'm allowing anyone to subscribe to it. I want to show people what we can do with these very volatile markets and hopefully help some of you through what is really a crazy time. So I teach a little bit every day, but most importantly, you see my algorithms running off of my screen. It's live webinar, real time. You can see what stocks are tripping my action candle indicators in real time. All right, moving along, let's take a look at the US markets, as we always do. And you can see that we broke the downward trend line on the SPY this week. We then broke from a rising bottom late in the day on Tuesday, and that led to a nice little rally. And I talked about this likely happening in recent videos that I've done, so it looks pretty good. I'm a little bit concerned because on Friday, we broke this little upward trend line on the open. We rallied through the day, and then at the end of the day, we broke down, and that is a breakdown from a falling top. So I think that there is a good chance that the market will pull back, move lower more next week. And I will be even more concerned if we start to get down through that 250 level, 255, not 255, maybe 252, 251 on the SPY. So watch that level very closely. I think that it's going to start to alarm investors how much the growth of COVID-19 in the US is happening, and certainly cities like New York are completely shut down. That has an effect on psychology, and that may be the catalyst for the next wave down in the overall market. So watch for that closely. Now, if we are able to move up through the highs of Thursday, then I'm less concerned. So if we can get up through, I don't know what it is, let's say it's 262, then I'm less concerned about more of a pullback. But if we get down through 251 on the SPY, be defensive. Moving along to that very long-term chart, I've talked about this. This is the monthly chart, and we have still held that monthly upward trend line. Now remember, during the month, in fact just a week ago, we were below the monthly trend line. We managed to make a comeback last week and close above it, so we're still okay on the very long-term time frame, but that could change. We've got 2 trading days left in the month. Let's see how things go early next week. On to the Russell 2000, which also made a little bounce back. This is your US small cap stocks. They made a little bounce back as well, but it's off of a new low. It is not off of a rising bottom. I did a video a few days ago about how markets and stocks make a bottom, and it's typically that they bounce, which is where we are now, they retest, and if they can build a rising bottom and then break to the upside from the rising bottom, then we've got a bottom in. We haven't received that yet. At this point, we're only here. We still need to see that formation of a rising bottom. So we'll see what happens next week, but that's what I'm watching. On to the Canadian markets. Here is the TSX 60 on a shorter term time frame, the intraday 30-day 60-minute time frame. And again, that upward trend was broken on Friday, and I think that could be the start of that retest. Now, do we go to new lows, or do we build a rising bottom somewhere around 18 and a half? If we make the rising bottom, that's good. That's the bottoming process underway. If we break down to new lows through the 1740 level on the XIU, then you have to be cautious yet again. On to that longer term chart, and here you can see that the monthly upward trend line has been broken on the Canadian market. Now, again, we have a couple days left, but I think it's going to break. Fortunately, unlike the S&P 500, which has done much better than the Canadian market has, the Canadian market has a very long sideways trading range here, which is going to give it some support. So I think we've still got pretty good support in around there. Certainly the Canadian market doesn't look great, but it does have some support which may hold. The big concern in the Canadian market is the energy sector, which really influences the banking sector and the housing sector, and so many parts of the Canadian economy are influenced by energy, and energy has really been decimated by the low price in oil. The TSX venture market, of course, the microcap stocks in Canada, they made their little bounce, but again, off of a low, very much like the Russell 2000 chart, and so it's still too early to call a bottom here. On to currencies, lots of volatility in the US dollar of late, up, down, up, down. I think we may see the US dollar pull back a little more. It rallied, and then it's now pulling back. And I was looking at the number of COVID-19 cases in the US. It's now the highest in the world, and I think that may weigh heavily on investors around the US and the US economy. Canadian dollar has made a little bounce back. This is now the daily time frame. The chart of the US dollar was the weekly time frame, so you'll just get a sort of a glimpse inside here. But this market went parabolically to the downside. It's bouncing back. It should get back to that downward trend line, so we've got a little bit more upside until it hits that. It's still a bearish chart, but it's an oversold bearish chart that is bouncing back, and I think that may continue for a few more days. On to interest rates, and we have the bond market climbing again. We had it we had it really go crazy to the upside, of course, with this parabolic move. Then it pulled back. Now it's recovering. Essentially, we're seeing lower interest rates, and I think that will continue because central banks have to do their best to stimulate the economy in this very extraordinary time. Commodities, gold all over the place. I get a lot of people emailing me saying, with all the craziness in the world, shouldn't we be buying gold? When I look at the chart, I see something that's very difficult to predict. Intraday trading of gold may be good because there's lots of volatility, but to me, holding gold overnight is a bit like throwing money on the roulette wheel in the casino. It's just very difficult to predict, and I don't really want to be a gambler. I don't find this easy to predict right now. Perhaps if we start to trend, I'll feel differently, but for now, I think this is just too difficult to predict, and so I'm not a big fan of trading gold overnight. Okay, intraday, but not overnight. Now, oil is in a downward trend. It is in a bearish downward trend, and therefore you really should avoid this right now until the trend can reverse. We need to see a break of the downward trend, a build of a rising bottom. That is not there yet. Volume is huge. People don't want to touch this stuff right now, and so therefore be very cautious with owning oil and oil stocks. Many of them are oversold, and they're starting to show some signs of bottoming, but I'd like to see a little bit of a confirmation in the oil chart, perhaps getting up through that $5 on the USO as a good sign. And finally, the fear chart. We always look at the VXX. It has gone up huge, obviously 15 to 75 on the big sell-off. It retraced. It's built a rising bottom. What I want to watch now is if that overall market starts to sell off, this thing should start to move up. So if we see the SPY fall down below that 251 level and start to break through some support levels, you want to consider trading the VXX again, because it could be coming alive and moving up towards its highs again. I wouldn't do that today, but I need to see a little bit more weakness in the market, a little more strength in the VXX, and it might be a good trading vehicle to take advantage of market weakness. So my ratings then, neutral on both time frames on the US market, but we got to watch it very closely. It changes hourly, so don't take your eyes off the market. Canadian stocks, bearish long-term, or sorry, short-term bearish, neutral long-term because it is at that support zone. Gold, neutral long-term, bearish short-term, and bearish on both time frames for oil. We've got this extreme price volatility, and that's continuing, but a bounce back this week will make investors feel a bit better. I think it could be a false sense of security. We want to watch the market very closely early next week. We should not assume that the bottom is in yet, and investors should remain cautious and prudent. Volatility is great for short-term traders. Gold, I would say, is hard to predict right now. Oil continues to be ugly. We need to see a break of the downward trend there. Fear remains high. All right, well, let's take a look at the market scan for opportunities. And what I'm going to do is jump over to the Stockscores website and take a look at a scan which I call action candle breaks. And it's stocks that are showing strength in downward trends, because even in a downward sloping market, you can have individual stocks that have life. And often they are, in the case of COVID-19, could be some biotech stock that is working on some sort of cure for the virus. It could be things like home delivery of restaurant services, like Blue Apron and these kind of companies that bring food to your door. That makes a lot of sense to be strong when the market is weak in this environment. So those are the kind of things that will sometimes come up in really what is a buying market scan. So let's jump over to the Stockscores and take a look at that. And I am going to select from the presets here the action candle breaks. Click on that and run the market scan. It found a mere 10. Let's take a look and see if any of these have promising charts. So what I'm looking for are breaks of downward trend lines. So let's take a look at TOPS a little bit shorter term because it's been beat up so much. So when I look at that 3-month chart, I see huge volume traded and a break of that little daily downward trend line. So now let's jump over to a 15-day chart. And here I see a big move to the upside, but it did not happen from a rising bottom. So that has me a little wary. I think this is something to watch next week. It's got big volume, big volatility. I would not buy it here, but if the intraday chart shows a good pattern, I think that you have to consider it because there is some sign of life there. Another shipping stock, SHIP, would have my same comments. Moving along, we don't have too many to go through. Let's take a look at this one on a 10-day chart. And there we can see SINT broke that downward trend line from a rising bottom. So if you could have found that on Friday at 40 cents, I think it was interesting. It went up to 60 very quickly. Again, showing that day trading is really the place to be right now. I don't love it longer term, so I'll keep on moving here. That one's going to come into resistance, the PSV there. Let's take a look at this. Now remember, I've shown you this pattern in recent videos where we want to watch for markets that are breaking downward trend lines from a rising bottom. So there we had the rising bottoms build, the break of the downward trend line. Again, if you were watching for that kind of a setup on this stock early in the day on Friday, it was worth considering. To buy it now, it's already gone up quite a bit. I feel like maybe the bus has left the station on that one as well. So this is just one thing to run for Stockscores members. You can run this every day, early in the day, that sort of thing. Here's another one that was good early Friday, but I don't really like it longer term. It broke out early Friday. This is, of course, the 10-day, 30-minute chart. BPTH, good strength, but coming into that downward trend line of resistance, I don't think that is ideal. So that is the kind of analysis I like to do with the market scan tool. And obviously we have an extraordinary market condition right now. We have to think a little bit about that, but there are still buying opportunities in this market. So let's get back to the day trade of the week. And this is a stock that triggered late in the day on Friday after 2 o'clock. But what it emphasizes is that even in a bearish market, a crazy negative market, you can still have buying opportunities. This is a day trade. There's the action candle. Sorry, you see the action candle. My little drawing tool is not working right now. There's the action candle where my cursor is. It broke out from an ascending triangle, went quickly higher. But another comment I would make in this market is that you have to be nimble. You have to hit and run. I call them Steve Miller trades because, of course, he sang the song, "Go on, take the money and run." And when you get signs of weakness, when a stock goes parabolic to the upside, you got to take your profits. And so there was a bursting bubble candle right there, and then it broke the upward trend line right here. To me, in this market, I'm going to take that money off the table quickly and lock in those profits because we're seeing many stocks make big gains and then give them all back before the close. Well, that has been the Stockscores Market Minutes. I hope you found it useful, helpful for your own investing and trading. If so, leave a comment, click on the like button, subscribe to the channel, click on the notifications bell. You know all the things you're supposed to do. So do them, and I will continue to deliver videos to help you through this crazy market. Have a great week in the market and trade well.